Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation. Being able to make money in a falling market is a game changer for investors. Now of course cash is a position too. Preserving capital when the market's falling is absolutely a smart strategy. However, learning how to play the market to the downside will allow you to grow your portfolio that much faster, which gets you closer to securing financial freedom, which is of course the ultimate goal. Now before we get into the various instruments used in a falling market, the first consideration that we want to make is, what is the market doing? Is the market in an uptrend? Is the market in a downtrend? Are those trends strengthening or weakening? Before we place any trade, whether it be a bullish trade or a bearish trade, we have to take into consideration what the market is doing. So here on the home page of VectorVest 7, we can see from our color guard, we had, as of the close of Thursday the 17th, November 17th, 3 red lights across the board. RT indicator lower week over week, buy to sell ratio indicator lower week over week. The primary trend of the market has turned down, and we are still in a confirmed down situation. We could see from our quick list gadget that we did have a slight sell-off yesterday across the board, with the VVC falling about 35 cents. At the very top, the market timing gauge says the color guard is bearish, and we do not advocate buying any stocks at this time. So we are in a at least short-term downtrending market. Remember, we're still in a confirmed down situation as well. So this would be a great opportunity to add a bearish position or two to your portfolio. By no means am I saying, hey, everybody, let's go short and close all your long positions that you've accumulated off of the, if I go to the market timing graph, October 13th bottom. What we're saying is, and this is a 1-year VectorVest composite chart. This is a market timing graph with the MTI in blue, buy to sell ratio in green, and the RT indicator in red. So what's the market doing over the last week or so? Well, it does appear, if I go to a 3-month chart, to be rolling over. This trend line that you see here, I've had this drawn on my chart now for months, and it does a really nice job of identifying the overall pattern that the VectorVest composite has been in now for the better part of a year. Right, November was the actual high, November 9th was the actual high, and folks, all we've seen over the last year are lower lows and lower highs on the VectorVest composite. We find ourselves once again at that long-term trend line. RT indicator closed below 1 yesterday. The buy to sell ratio indicator closed back below 1 yesterday. Not to mention the few bearish candlestick formations that we've seen here over the last week or so. One black crow that was formed on 11/14. Spinning top that was formed on 11/15. That's a variation of a doji. It does represent indecision about the direction of the market, or the direction of a stock price if we were looking at a stock. But the market does seem to be turning over here a little bit. Now, your guess is as good as anybody else's where we head from here. But our data and our indicators are pointing slightly to the downside. It's not guesswork. I'm not just looking at the VVC and it's rolling over and I'm saying let's go short. I'm looking at the information that's provided to us on the home page, with the color guard being bearish, 3 red lights across the board, primary wave is down. That is your signal that, again, it is okay if you choose to do so. Not everybody has to go out and short stocks or buy contra ETFs or buy put options. Those, by the way, are your 3 instruments and 3 strategies that you could deploy in a down market. Today we're going to touch on 2 of them, shorting stocks and inverse ETFs. But I wanted to first go through the market situation and make sure everybody understands what we're looking at here. Now, if we had green lights in the color guard and the trend was up and all of our indicators were higher week over week, we wouldn't talk about shorting or hedging our portfolios with short positions or bearish positions. We'd be talking about going long and buying stocks and adding bullish positions to the portfolio. Okay, so first and foremost, what's the market doing? And which strategies and instruments should I apply in that type of market environment? So this might be the very beginning stages of another leg lower. Again, we don't know, folks. We're just looking at the data. But here's the pattern. right? Stocks behave in patterns. Markets behave in patterns. Markets behave in trends. This has been the trend for the last year. So now is not the time to be complacent. It's been a pretty decent run off of that October 13th low. You've probably accumulated some long positions. Portfolio's growing a little bit. But given the situation that we're at now and the pattern that we've seen over the last year, we have to become a little defensive and either, again, hedge our portfolio here with a bearish position or two and begin to play the market to the downside. So that being said, the instruments and strategies that can be used in a falling market are either shorting stocks, contra ETFs, or learning how to trade options. In a few weeks, by the way, we're going to do another special presentation on the 7 secrets to making money with VectorVest. Secret number 5 is learn how to trade options. We'll do that. I believe Ron will do that in a few weeks. And that'll give you another strategy to use in a falling market. The first technique that I'm going to talk about are contra ETFs. Now, everybody, no matter if you're trading in an IRA, self-directing your 401k, retirement account, any cash account, you're able to use inverse ETFs. You don't need a margin account like you do if you wanted to short stocks. Okay? So what I like to do, my preferred method to find inverse ETFs is to go to Viewers, go to the watch list viewer, and open up the ETFs watch list folder there. We've broken them down very specifically, very easy to kind of go through and find the inverse ETF of your choosing, because inverse ETFs, just like bullish ETFs, are either non-leveraged, double leveraged, or triple leveraged. I don't mind trading triple leveraged ETFs. If you're new to the inverse ETF kind of arena, I would focus on the index ETFs contra watch list or the non-leveraged ETFs contra watch list. This will bring all of your non-leveraged contra ETFs. Now, if we just keep the sort as VST descending, there's some obscure ETFs at the top, right? REK. This is likely a real estate ETF. If I right-click on it, view the stock analysis report, it says RE. Yeah. So it's corresponds to the inverse or opposite of the daily performance of the Dow Jones United States Real Estate Industry Group. Okay. If you're not familiar with that sector, you're not familiar with that industry, maybe you skip over that one. You continue to kind of scroll down the list and say, I know the NASDAQ, familiar with the NASDAQ. I'm familiar with the S&P, even familiar with the Russell. Maybe stick with the broad market indices if you're new to trading in inverse ETFs. An easy way to kind of filter through is I just scroll over to the right. I sort by average volume. Big thing with inverse ETFs. You want that liquidity. You want to trade the actively traded inverse ETFs. Simple way to do that in the watch list, just sort by average volume. Now you have SH, S&P 500, non-leveraged inverse ETF, PSQ, that's a NASDAQ. There's your Russell, there's your Dow. I'd probably stop there. That covers all the major indices. If the market begins to fall or is in a sustained downtrend and a strengthening downtrend, and you want to learn to profit and make money during that falling market, these are fantastic instruments and ETFs to consider. Now, if you are familiar with and have traded inverse ETFs before, specifically leveraged ETFs, then you can move higher in the list. You can go up the watch list folder here and go to either the triple leverage contras or the double leverage contras. I would do the same thing in terms of your stock selection. I'd sort by average volume. NASDAQ, S&P, semiconductor, biotech, Dow. These are some industries and sectors that folks are more familiar with, and I think this would be a good place to start. The other option that you have is shorting stocks. Now, with shorting stocks, you do need a margin account. Okay, it's not permitted in retirement accounts, 401ks, IRAs. You do need a cash account. You do need a margin account to be able to short stocks. And there are two different types of stocks to short. What do I mean by that? Well, let's go into the Unisearch tool. And the first type of stock to short would be found in the shorting search, and I'm in the searches short folder, called Ballistic New Highs Short. If I run that search, it's looking for stocks that have hit a new 52-week high. So you're saying, why would I short a stock hitting a new 52-week high? And that's a great question. Let's take a look at the results here. Most of these stocks, if not all of them, are overvalued, right? Price above value. A lot of them are grossly overvalued. This is almost like a reverse bottom fishing play, right? So if you're bottom fishing, if the market's coming off of a bottom and beginning either the blast off phase or a new uptrend off of a bottom, we want to go bottom fishing, right? We want to find undervalued stocks that have been beaten down in price. Here it's the total opposite. We're looking for overvalued stocks that have been rising in price. The play here is, or the bet that we're making, is that these overvalued stocks that have been rising in price with the overall market rising, they'll tend to fall the fastest when the market begins its downtrend and then enters into that strongly trending down market. If we look at the charts, don't be too concerned about what we see here. All of these stocks are screaming higher in price. Here's 9. RT well above 1, close to 2. The stock is hitting a new 52-week high. And we're going to see the same thing with all of these. Now, if I put on value, we'll notice that price, for the most part, is well above value. And you know what we say? We say that price and value will eventually meet. We're not quite sure if price will rise towards its value or fall towards its value. In this case, again, the bet is that price will fall towards its value when the overall market falls. So if I go through a lot of these are going to have your buy ratings or hold ratings. Okay? And again, the bet is these will likely fall the fastest when the overall market falls. Now, this scan is actually used in one of our automated trading systems. Chappell's Champs Goes Ballistic. So if I go to Viewers and go to the Trading System Viewer, Chappell's Champs Goes Ballistic is one of the best trading systems in the Trading System Viewer over the last year. It's up 65% over the last year, 44% year to date. It's got a pretty big drawdown there. We could see that on the equity curve, about 26%. Annualized rate of return about 180%. This strategy short stocks during confirmed down signals from ballistic new highs short. Now what I did was I created a paper portfolio. If I go to the portfolio manager here, the Genius, here's a long-term portfolio of Chappell's Champs Goes Ballistic. Chappell's Champs is the search that's used in up markets. Ballistic new highs short is the shorting search used in down markets. Since inception, which was about January of 2019, this portfolio is up 694%. Currently, it has all long positions in the portfolio. So you might be wondering or asking, how have the short positions performed during this almost 3-year campaign? Well, if I go to reports and I go to the summary report, you can see that the short positions, all of the closed short positions in this portfolio, 92 winners, 58 losers. That's a 61% winning trade percentage. That's actually a higher winning percentage than the long positions. So I know it's a little scary, I don't know if that's the correct word, but a little concerning shorting a stock that's in such a strong uptrend. But guys, the advantage that you have is VectorVest is telling us now, or will tell us when the market does fall, that the market's falling. Right? So that's your advantage. You're in a downtrending market, you have red lights in the color guard, you're in a confirmed down, maybe at some point here the underlying trend goes down. These stocks, as kind of displayed here, do tend to perform pretty well in that type of market environment. 60% winning trades on short positions in a bull market is pretty good. Now, if you're saying, still, I'd rather short stocks that are already falling, and that's fair. So a strategy that you can use, or the type of stock that you would favor, would be something like Doug's Downers. Doug's Downers looks for sell recommended stocks with poor fundamentals, RS and RV below 1. If I run that search, graph them, these might be a little bit more your cup of tea, right? Stocks that are already falling, RTs below 1, 52-week lows maybe, or at least just a little off of the 52-week lows. But overall, you look at the last year, downtrend. Here with VYGR, you've seen off of the April high, nothing but lower highs here. What's happening right now? We're actually coming off of another lower high. The stock is also overvalued. Value is here in green. These might be a little bit more, again, your speed. Two different approaches to take. Shorting stocks that are already falling, or shorting stocks that are overextended, overvalued, the market begins to fall. Those do tend to fall much, much faster. And again, the other instrument, folks, is inverse ETFs, going back to my preferred method, which would be to go to the watch list viewer, the ETFs folder, look at your double leveraged, triple leveraged, non-leveraged contra ETF watch lists, sort by average volume, and then just cherry pick maybe the broad market ETFs that are at the top of the list. Going back, circling back once again to the most important part of today's presentation is, what is the market doing? Don't jump the gun in an overextended market, for example, and start to short stocks before the market falls. Just like we wait for the blast off phase off of a bottom to start buying again, we wait for the market to begin its downtrend, or, again, at least roll over like we potentially are seeing now, before we start adding short positions to the portfolio. One of the things I said earlier was, look, by no means am I saying let's close every long position in our portfolio, short 10 stocks, or buy 10 inverse ETFs. I'm not saying that. Now is a good time, it does appear, to maybe add a short position or a bearish position to your portfolio to hedge those long positions, to protect those profits on those unrealized gains that we've all experienced here off of the October bottom. All right, folks, I hope you enjoyed today's special presentation. Don't forget, Monday, our special presentation Q&A. I'll spend a good hour answering any questions that you guys have about what I went through today. Have a great weekend, everybody.
Hey, VV Nation, Glenn Tompkins here from VectorVest. And guess what? We're going to Tampa. That's right, January 6th through the 7th of 2023. Absolutely, we're going to be there live, and we want you there too. So what's going to happen? You're going to get an opportunity to meet and interact with VectorVest instructors. You're going to receive a physical copy of the course workbook right then and there. You're going to enjoy a continental breakfast each and every day, and have a served lunch as well. We're going to have a little bit of fun, and we're going to have a cocktail party reception on Friday. You're going to receive access to the full recording of the event. Folks, you need to go to www.vectorvest.com/Tampa to go there live. And then if you want the live stream, which is free, you go to www.vectorvest.com/stream. Folks, we want to see you there, and it's going to be a great time, but we get to meet in person. So you don't want to miss out, because the price is going to go up quick. So you want to take advantage of it as soon as you can. See you there.